Hello everyone, this is PK Academy. So today in this video we are going to continue with the part 2 of accounts for incomplete records. Let's have a recap for the previous video. So in this chapter our motive is to find profit. To find out profit we have two methods. One is statement of affairs method and second one is conversion method. And now we are in the segment of statement of affairs method. Okay. So in previous video we learned how to calculate profit and loss using statement of affairs method. If you didn't seen that video, please check out the video. The link will be in the description. Okay. In order to calculate profit and loss using statement of affairs method, we need three information. One is closing capital, opening capital, and sum adjustment, which is nothing but drawings and additional capitals. Okay. So in this video what we are going to learn is what is statement of affairs. Okay, so we know drawings additional capital will be given separately, but how we can calculate closing capital and opening capital, that is the point. Okay, statement of affairs means a statement which is help to find out closing capital and opening capital. So using statement of affairs we will be finding out what is the closing capital value and opening capital value. So what is the statement of affairs look like? Okay, statement of affairs will be look like same as balance sheet. Okay, there will be left side liability and right side is asset. Okay, so we know that capital plus liability will be equal to asset, right? So we can draw a conclusion that asset minus liability will give capital amount, right? So there will be details given in the question about what are the liabilities and what are the assets. Okay, there will be liabilities and there will be assets given in the question. So if we write those liabilities given in the question and assets given in the question, then there will be a difference which is deficit in liability side, and the deficit amount will be the answer which is capital amount. Okay, which is nothing but capital amount. So when we prepare this statement of affairs for the year ending 31/3, then the balancing figure of capital will be known as closing capital as it is on the closing date, and if it's prepared on 1/4 on the opening date, then it will be known as opening capital. Okay, it's simple. Let's see some questions based on this and let us get clarified more. So let's see a simple question first, and let's see the statement first. So liabilities on the left side, assets on the right side, and after putting these numbers there will be deficit, and the deficit will be known as capital, balancing figure, right? Hope you understood. And let's start with a simple basic question. So first let's read this question. Ganesh started business with a capital of 75,000. He started his business which means nothing but this is opening capital, right? And he didn't prepare a proper books of accounts, and the following particular available as on 31/3/2018. At the end of the year these details are provided. So after these details we'll have one line stating that during the year he withdrew 15,000 for personal use, which is nothing but drawings, and introduced further capital, which is nothing but additional capital. So what the question asks is calculate is profit or loss. Okay, we know in statement of affairs method how we calculate profit or loss, right? In the previous video I explained about it. So first we'll take closing capital, and after that we'll add back the drawings, and after that we'll remove any additional capital, and after that the difference amount with opening capital will be known as profit or loss, right? This is a statement which we learn to find out profit and loss using statement of affairs method. So here drawings additional capital is given and opening capital also given as 75,000. So what we have to do is find out closing capital and put these informations in this statement and find out profit and loss. It's such a easy thing. Let's see. Okay, so in order to find out 31/3/2018's statement of affairs, we first have to know what is assets and liabilities. Cash is an asset, stock of goods is an asset, bills receivable is an asset, furniture, land is assets, debtor asset, creditors is liability, bank is asset, payables is liability. Okay, these are the things we know. And if you think these drawings where we have to use drawings, so in balance sheet what we do is capital minus drawings, right? We'll less drawings and add back the additional capital, but here we don't use this drawings and further capital in statement of affairs. Why? Because we are going to use it in the statement which help to find out profit and loss. Remember, we'll add back the drawings to capital, closing capital and less additional capital. So for now these additional capital and drawings will not be used in statement of affairs to find out closing capital. Remember that only. Okay, and so let's start solving the question. So how it will be look like? There will be liability and asset. These assets will be on the asset side and these two liabilities on the liability side, and the difference will be deficit on liability side, and the deficit amount will be closing capital. Okay, closing capital because it's on 31/3/2018. After finding out closing capital amount, add drawings which is given here and less further capital, additional capital which is given here, and again less profit, sorry, and again less opening capital, and we will get profit and loss. Okay, that's the answer is going to be there. And let's see the answer written. So creditors is here, bills payable here, cash, bank, stock and all the assets are here, and it will be tallied, and the difference deficit amount will be capital, which is closing capital. And after that we'll create a statement to know profit and loss, closing capital which we found out, add drawings, less additional capital gives us adjusted closing capital, and again less opening capital, and we will get a positive amount, so it will be profit made during the year. Okay, as simple as it is. Let's see another simple question and wind up this session. Okay, so here data's given for two periods, one is opening period and closing period, and further capital which is additional capital, drawings are given. Okay, what we will be doing is create a closing statement of affairs and opening statement of affairs to find out opening closing capital, and we will use these details, drawings, additional capital, and we will find out what is profit or loss. Okay, be careful here, it's for 2,500 per month. The drawings will be not for like, see, drawings will be for 12 months, not for 1 month. Okay, you have to multiply it with 12, and it's easy. Liabilities are written, assets are written, and the deficit amount is capital. This is for opening capital, and same statement will be prepared to find out the closing capital, and after we put all the details and find out profit. Okay, easy. Next, the final sum, we will take this sum only. So the final sum is going to be this one. So same as previous problem, two periods are given, so we have to prepare two statement of accounts to find out opening capital and closing capital. The thing is, drawings given and additional capital given and provision for 5% on debtors and plans to be depreciated 10% is given. So what we have to do is such a easy way we have to find profit or loss. So first let's do one thing, let's find out the statement of affairs for opening period. Okay, so here these lines given, right? A provision 5% on debtors to be made and depreciation is to be made on plant. Okay, these things will be appeared on closing statement of affairs only. Why? Because after finding opening capital, which means we have already opening capital, after this some operations happen. While these operations happening, the debtors, the provision made and depreciation will be made. Okay, so these items which is happened after opening capital will not affect opening capital. So while preparing statement of affairs for calculation of opening capital, you don't have to put these things here there. Okay, so it will be easy. Cash in hand asset, stock asset, debtors asset, liability, and bank balance is given as CR. Okay, you have to be careful here, because if you open a bank account, okay, it's not on bank, I say bank account, I am not telling this like that, I am telling you like in accounts we prepare cash account, asset account, like that. Bank account is an asset account, right? So whenever there is an increase, the bank account will be debited. So the closing also has to be debit balance, right? Closing also be a debit balance, but here is given credit balance, which means it's on credit side. Okay, when there is a credit balance in bank account, which is an asset account, which means decrease, here we will take it as a overdraft. Okay, overdraft. So the bank account which is given as credit will be known as overdraft, and the overdraft is showed in liability side. Okay, this liability and this is asset. And let's move on. So these things will be liability, and others is assets, and the difference amount will be opening capital. Okay, see, bank overdraft, creditors, cash, stock, debtors, plant, furniture, and the closing figure is opening capital. And next thing is, for the closing period, it's nothing but here bank is an asset, and only thing is creditors is liability. So what we have to be careful here is, when bank balance written, it will be written 18,000, cash in hand 1,500, stock 16,000. But when there's a debtors, what he has said is provision of 5% on debtors is to be made, right? Okay, right, which means we are suspecting that there will be unrecoverable debt which is from side of debtors. So we will create a provision, which is 5% provision, we will remove it from debtors. So in the asset side there will be like debtors 34,000 and minus provision 5%. 5% we have to less, because we are suspecting that 5% of debtors will not be recovered. So in 34,000, 5% came to 1,700. Okay, when we remove this account, the debtor closing balance will be written. Okay, and plant is to be depreciated at 10%. Same like this, plant will be written as 80,000 given here, sorry, this amount also given here, and plan 10%, which is 8,000, will be subtracted from the amount. Okay, that's all, and other things are common and easy. Let's see. Statement of affairs as on 31st March, which is closing, and creditors given, bank balance, cash, stock, debtors, and debtors 30,000 given because closing amount is 30,000, and a provision 5% is subtracted, and plant less depreciation and furniture, and it will be equalized, and the deficit amount will be known as capital balancing figure. Okay, so till now we have acquired opening capital and closing capital, and we have drawings and other details, drawings and additional capital. So what we will do, easy, put a statement of profit and loss, first closing capital, add drawings minus additional capital, and again less opening capital, and you will get profit or loss. Let's see, let's do that. Opening capital is 92,800, closing capital is 1,04,000. So closing capital is 1,04,000, drawings given in the above question 40,000 less additional capital minus opening capital, which gives you a positive amount, which is nothing but profit during the year. Okay, I hope you understand this sum, and if you like our videos, then subscribe our channel and follow for more questions. Thank you.